Hello and welcome to the day ahead. It is Monday, May 30th. I'm Andrew Gagan. Well, global markets rallied into the end of the week after data showed US consumer spending rose in April and the uptick in soaring inflation slowed. European shares finishing at three-week highs with the MSCI World Equity Index up more than 2%. In the US, stocks were sharply higher, the Dow snapping its longest losing streak since 1932, with the S&P posting its strongest week since November 2020. All 11 of the major sectors were higher, with tech, real estate and consumer discretionary the outperformers. Trading, though, was light, with markets closed stateside tonight in observance of Memorial Day. Tesla, Apple and Microsoft led the drive in tech, with the end of the first quarter earnings giving a further boost to sentiment. Of the 488 companies who have reported, some 77% were a beat on the street. Well, the US dollar index closed marginally weaker, and the Aussie dollar has found some strength, pushing above 71.5 US cents to a three-week high. And a raft of US economic data was released on Friday. The Fed's preferred measure of inflation, the core personal consumption expenditure deflator, rising by 0.3% in April to be up 4.9% on the year, which was in line with forecasts. Personal income rising 0.4% for the month, with spending up 0.9%, and wholesale inventories and retail inventories for April came in slightly stronger than expected, and the trade deficit narrowed. And the University of Michigan consumer sentiment read was revised downwards to sit at its lowest level since 2011. 1 year ahead inflation expectations easing slightly to 5.3%. Looking ahead, focus will be on China's continued push towards COVID reopening as Beijing plans to end its curbs, with both PMI data and the Caixin Factory Index hitting the wires Tuesday and Wednesday, expected to contract off the back of those strict lockdowns. And in the US, all eyes on the non-farm payrolls report that will be released on Friday. Unemployment again expected to fall, holding near 50-year lows of 3.5%. with around 350,000 jobs added to the economy in the month of April. Geopolitics will also be in play as Russian forces step up their assault over the weekend, and Kiev intensifies calls for longer-range weapons from the West to help fight back in the Donbass region. So the global rally in equities, which closed last week, is set to continue on the local share market this morning. Taking a look, ASX futures currently up more than 1.1%. And energy company AGL will be in focus this morning, with reports it could look to a strategic review as it considers abandoning its proposal to split the company into an energy retailer and a generator. The demerger was set to be voted on by shareholders on June 15th, but the board has faced a relentless campaign by tech billionaire Mike Cannon-Brookes to ditch the proposal. His private firm Grok Ventures, currently owning 11% of AGL, and has attempted a takeover in tandem with Canadian firm Brookfield. Well, in the energy space, global oil prices pushed higher on expectations of increased global demand for crude. The price of Brent up 1.7% to $119 a barrel. Traders are also watching the outcome of EU negotiations on an embargo of Russian oil products as landlocked Central European countries look for an exemption to pipeline deliveries. The iron ore futures price up 0.7% to $133 a tonne. Base metal prices rose on Friday, nickel up 4%. And the gold futures price up 0.2% to $1,851 an ounce. Well, the risk-off sentiment continues in the crypto space, with most coins having recorded almost 9 consecutive weeks of negative returns. Bitcoin losing some 27% this month to be 40% lower since the beginning of the year. Quickly looking at what's on the data docket locally in the week ahead, all eyes trained on Wednesday for the March quarter GDP. Market expectations are wide, ranging from as low as 0.2% to as high as 1% in the period. And that is your day ahead. See you again tomorrow.